cool if I record this? All right, so we are
Right.
now recording. Yeah, so did you take a look at that one or no? Not yet.
I just watched the first couple of minutes as an intro.
Okay, cool. All right. Yeah, so that will be your final session. That's a 6th session. It's kind of cut off. It's only really like 30 minutes, but the other part that I had of it, so when I was screen recording it, it was like 45 minutes long, but the last
Yeah.
15 minutes is exactly what the first 30 minutes is. So I felt like, oh, like, do I really need to add this or screen record it back in? Like, I didn't feel like it was really that necessary because you'll get the gist of what it is and how to kind of go about it. It's so funny because I see them right here, but like and what supply and demand is for next week, because we're not going to be meeting on Zoom. Like, you'll literally just watch it whenever you're comfortable. And then if you
Yeah.
have any questions or you want to go over some examples with me, then obviously I'm here and we can do that whenever you want.
Okay.
But because I had that material on record, it was just something I could just give as like the last session. But yeah, supply and demand is really, really cool. And that's where you'll really find, like you said, those institutional buyers or those big boys that's just like, they don't look at the markets all day. They don't trade it all day. They like sit at a specific price and they're like, this is where I'm willing to get in. And they know that because of research they've done and things that they have in
Right.
the past. So then once they have that information, they're just like, no, I'm going to sit here in this demand zone and wait for price to come back here. And when it does, I'm going to have a really good opportunity to get in for a short. Or, if it's a supplier, it's like, or is the other way around? Supplies, God, Britain is like fried. Yeah, demand's below, supply's above. Yeah. So if it went up to like an area like right here, this is most likely a supply zone because of the way you can see that it rejects from the candle.
Yep.
This is this is a tick chart, so it's probably not the best. But you'll find that when you watch the videos, and it's really like, I felt like I didn't know anything about supply and demand before I had like that course and I watched that, and then I was like, oh, this makes a lot of sense. And then you'll really start seeing them. I don't use them as often as I should, because if you plot them out, and that's the thing with some things like indicators or supply and demand, it's all subjective, because if you're on a 15-minute chart, your supply and
Yep.
demand zones are going to be different than if you're on a 4-hour chart or if you're on a daily chart. So
Yeah.
it's like, it all just depends kind of like what time frame did you find it off of. And, like maybe it's going to run through the supply at 15-minute, but it's going to reject at the supply from the 45-minute, time frame.
Right.
So that's why it's like, it's not the best. Like, some people strictly just go off of supply and demand, but it's like, I don't know. It's hard because things could happen where you're like, oh, I'm definitely going to short at this supply, they're all like counter trends. Because anytime you take a supply or a demand trade, you're going against the trend of what it's actually doing. So you have to be really confident, like, okay, I'm going to put my money in here. And if it doesn't do what I think it's going to do, then I better be ready to get out, because there's no like waiting, like, oh, maybe it will do it. Maybe it will do it. Like, no, like if it's not working, it's not working. So I guess that's one like perk, like you would know right away pretty much if it's not going to work. If there was just some huge momentum and it's pushing through the supply zone, then you're pretty much fucked, So.
Right. Okay.
Yeah, so you'll watch that and you'll get it. Today we're doing indicators. So I know you and I have talked about indicators before. I don't use that many, but we will go over all the ones I use. And then if you want to talk about any that I don't use, I know a few others that I used to use, like RSI and MACD, but I don't use them anymore. I just feel like they're too laggy and behind, so
Okay.
I don't. Have you started using TradingView or no?
A little bit. And I'm kind of dueling between the two of them. So I'll use TradingView because the it has some features that Tradovate does not on its chart that I actually find that I actually find useful.
Okay. I just didn't know if you started playing like with the indicators or anything like that on that platform.
Yeah. I started working with their indicators with Tradovates are actually pretty good. Literally, the only thing I've seen some really complex visualizations that come off of TradingView that others have done, and they look beautiful, and I'm sure they're meaningful. Literally, the only thing that I'm probably using is the pitchfork, so to speak.
Okay.
That I wish Tradovate had it, but they don't. But the pitchfork as just kind of a charting tool is I think is super helpful.
I wonder if they have it here in Thinkorswim. Like, it sounds like it's like a indicator? Or you just see it like how you would see like a double top or something?
Yeah, it's basically just, the pitchfork is just obviously it's just a fancy line, fancy line structure, but relative to indicators, what and again when I'm on the 1 minute,
Right.
the the EMAs that I have set up between the 50, the 100, and the 150,
Uh-huh.
and then combined with the pitchfork, it's pretty solid, to be honest with you. Like, I am amazed at, and that's really what I've just been following in demo, is how and that's kind of what I was messaging the other day. Like, when I say the screenshot of the pitchfork as well too, I'm like, this is basically the range that it should be operating in, and as soon as it breaks, it looks like it's going to run up and touch the 50, and it kind of sort of got, and it runs up, and all the indicators kind of work in very similar ways, or there are enough indicators out there that will go ahead and give you kind of uh, a consummate picture. But there's a fib retracement when the breakout happens, so to speak, if you look at the overall. But it's like, where does that breakout come from versus where does it keep going? And
Right.
as soon as it breaks the pitchfork structure, it's like, oh, okay, we're starting to move the other way, so to speak.
Right. Yeah. No, yeah, I really like those too. And like you said about the 1 minute, sometimes I will go down to the 1 minute and I expect it, like on the 5 minute, the 15 minute, I don't expect it to really come back to my EMA, but on the 1 minute, I expect it to. So I'm like, oh, I'm just going to wait till
Yeah.
it comes back to my moving average and then I'll get in for the one, whatever it had just done, it's going to pull back to whatever the 1 minute moving average is. Like it's just going to.
Yeah, and you can just tell that, and that's my impression, is that, in the early hours, between the open to, between the open up until before 11, there's enough, momentum in the market, so to speak, where it looks like, the trends can be spotted out and so on and so forth. But, and again, that's where I just ran into difficulty between 11 to close. It's just a super technical environment, but it's amazing to see that there probably are enough people participate in the market that are running off same or similar technicals, and
Uh-huh.
the market just follows it, so to speak. That's like,
Exactly.
there's a couple spots where it's like, where I saw the, and not to get into too many stories, but just this week, where price was starting to consolidate against an area of resistance, and then the EMA was moving up, and it's like, there's no place to go, so to
Mhm.
speak. So, and then all of a sudden, within just like a minute, in another candle or two, it literally broke hard into a short, because it knew it was getting pressured in there. So it only had, it's got to go up or down,
Right.
kind of thing.
Yep.
So yeah, so it functions against those boundaries in a very strong manner.
Yeah. Agreed. Cool. All right. So obviously, I know you can use the tools that you have come to really enjoy and like. I'm just going to tell you because a little bit about the ones that I use
Yeah,
and
for sure.
then kind of like how they work. So I use the two EMAs that I use, and I know a lot of people that will use like the 50 and the 100 and the 200 just because that's what most of the institutions use.
Yeah.
For some reason, I use the 9 and the 35, and
Okay.
they seem to work out well as far as the cross. So I used to have the MACD down here too, and then when I would do that, I would use the MACD with the cross of the EMAs and get like double confirmation because, excuse me, the MACD, where did it go? The MACD is a measure of momentum. So obviously everything is going to be behind as far as, okay, there we go. As far as when we see the information, like when we see this cross, obviously it's going to be after like most of like the momentum has already happened. But
Yep.
when it comes to something like this, if it's during a busy hour, like obviously the morning or London Open or something like that, you're going to get follow through. Like, so I don't mind really knowing that this is behind. Like, you're not going to see this cross probably until like this candle or this candle up here. This is
Yep.
oil. I pulled up just because it's easy to see some more of these things on here, but you're not gonna and it's usually not gonna separate so quickly unless it's some huge gap or some huge news or something. So after you get the cross down here in the MACD, you're gonna have some time seeing. I didn't have a cross yet in my EMAs. Like my EMAs didn't cross until over here at 12:30. So with the MACD crossing, with the momentum changing, and that's what these bars give you too. I don't know exactly how it's displayed on your trading platform. Sometimes I get rid of this, but then it kind of helped because the darker shades, meant that it was like decreasing, but the lighter shades meant that there was like more momentum. And you can see that
Oh, interesting.
some of them like change up here even in the middle of the trend. So you could get an idea like, oh, maybe if they were getting darker, you could get out and like, you know, even though it hasn't crossed yet, you might like, oh, it may be changing. So you can see that was like here, that was like this because they were like 3 green bars. But and this is a 15-minute chart, so it's gonna be pretty strong. But once you get the cross here, so you're not gonna see it at 9 a.m. You're probably not gonna see it till like, you know, 9:15, 9:30 or whatever. But if you take that short, say at 9:30, and you're willing to keep your stop like up here, like right after it crossed, and then the top of that candle, so 56.
Yeah.
So if you got in here, so 36, so you would have to give yourself 20 ticks instead of 10 ticks, which I like. But you know, you could base it, you could put it at 20 and then kind of see how it's going. If it looks like it's not going in your favor, you could turn it around. But I really like the MACD cross, but then I felt like, I think the only reason I got rid of it is I felt like I was looking at too many things, and I was kind of just like overwhelmed with all of the different indicators, because I had MACD and then I had RSI. I think I even still have the settings saved in here. Let me pull it out. No, it's not this. It's this. Load study. Oh gosh, and then I got into Bollinger Bands. Have you looked into those?
Yeah, I've seen
Dude,
some.
it is like too much. It's too much.
Yeah.
So, all right, so this is how I had it before I also then found Bollinger Bands, and I was like, oh, I should do that. So I would just open up, this is the CCI. So the CCI and the RSI are pretty much the same, where it's like overbought and oversold, right? Like I don't even like, I feel like I don't even sometimes really know, but I would just stretch these out. So if I saw it going into here, and then the people say you can see double bottoms and double tops off of the RSI. I never really noticed that, but like sometimes you'll get a formation. I wonder if we can find one where it will be like an M or like a W, like in like the exterior area. So then you know that it's strong. Like see, kind of this is an M. So and look, and then you look up here, and it's like this is pretty obvious that it was an M. But so it was touching in the RSI. It was touching this overextended area, and it pretty much made a double top, and then it just crashed. What time was this? 6:45 in the morning. 6:45, and then look at that. How much was that? $25.50. Went down to $23. That's exactly what it did today too. It got up to 26, and then it dropped from this 26 to 23. Like that's insane. So that's what. So the RSI, I kind of used that before, and the CCI. But I think the MACD and the EMAs are kind of my favorites with the crossing. The MACD more so because of momentum, because you know if it's like I said, if it's during the time of the day where you know, and like obviously you're watching your volume, you're seeing how high the volume is. If you know this is a time of day where movement is happening, then you can take it off the MACD pretty much if your EMAs haven't crossed yet, because maybe they're just like a little wider or something, but you can see this, that it's crossed, then I would take that trade, whether it's long or short. See like how messy it gets here, like in the night when it's like sideways and it's not sure. But when you have the momentum and it's actually opening up and you have people buying and selling, then you can rely on the MACD to give you a little more accurate information.
Okay.
So I like that one. And then, like I said, the EMAs. Oh, do you use the VWAP at all? VWAP?
No, I don't.
All right. So I don't know. How can I, hold on, let me just get rid of these really quickly. RSI. So I'm not even really sure. I'm sure I was sure at some point of, oh, see, this VWAP puts bands on it too. I don't know why. Yeah, the Bollinger Bands, I tried to get into that, and I'm like, I don't know. You're just supposed to like ride. You're supposed to ride the side down, but if it's already moved down, then you're not supposed to get in it because it could change at any point. And then if it crosses over the middle, it's pretty secure that it's probably going the other direction. I don't know.
Yeah.
But then I just felt like I was watching way too many things, so I got rid of it. Have you found it to be useful for you?
No, I haven't. I took a look at what it is on the technicals and its implementation. Literally the best thing that I think that relative to the concept of relative to the concept of indicators.
Uh-huh.
So this is kind of how I've internalized just a little bit of with indicators. The indicators are basically are dynamic levels of support and resistance, whereas the things that you've shared through our coaching is basically there are, I guess I'm not to necessarily make up like a whole bunch of words, but like hard levels of support and resistance. So these are going to be your LISs, these are going to be your day opens and day closes, and then maybe some other lines that would be indicators, and those are kind of going to be the hard levels that exist, whereas all the other indicators really just functions like the EMAs. Those are just going to be the dynamic levels of support, and resistance. But as I was able, just kind of going through, in demo, then in live, uh, structuring out the levels, I was actually doing. I felt that I was doing pretty good at getting the levels developed, and from the standpoint that the price action was actually participating, either going above, below, at where all the levels were being indicated at. But obviously price moves up, price moves down, then it moves across over time. The pitchfork with the shift line is actually my favorite right now, so to speak, because
Okay.
I watch it, and again, maybe that's just more of a function of kind of the midday stuff. But as soon as it breaks that shift line, where you're drawing from the furthest back point of the pitchfork over to the other level, it basically will trade within the range of the pitchfork and whatever. But then as soon as we break out, there are a couple behaviors. I guess suffice it to say, as soon as we break out across that line with like one full candle on the minute, it literally is moving the other direction. Something different is going to
Okay.
happen, so to speak. And that just seems super solid. The only trick, of course,
Right.
is can you catch it early enough, because the pros already see it coming, so to speak.
Or they know. Yeah, exactly. So I know you never want to get caught in the middle. Or that's what I was saying today, kind of with like the close or the last hour with ES. It's just like, yeah, you could be like, this is definitely going down. You can look at it on the larger time frame and say it's clearly a short, clearly. But are you
Yep.
willing to stay in for a 10-point swing against you before it continues down? That's the question.
Yeah, no, 100%. And I need to go take a look at what today's actually was. But I completely agree that there's relevance from the standpoint of it's amazing to see, because as much as we were talking about indicators, if I had to structure like the dominant factors that
Uh-huh.
make somebody successful in a retail setting,
Right.
the time component is way more massive than just participating in the marketplace at the correct time is more dominant. Not that the indicators are not important, but the time element, it seems to be a dominant factor as it relates to kind of the level of retail that we're engaging in. So that's where I'm looking. That's probably why I've been working so much on other projects that I haven't fully committed to restructuring my sleep schedule, because there's a 2 hour difference out here in Colorado, to
Uh-huh.
being in market, so to speak, when it's occurring. So that's where I just basically said, okay, we're just gonna go back to demo for a while, and then we're gonna restructure our sleep schedule and work on getting back into market during that prime hour, because it's just so difficult during the other stuff. But all that being said, I completely agree the way ES is behaving, at least because that's just where I'm focusing on for the time being, that I should get an alarm set for 3 p.m. Eastern, and just or 15 minutes before, it's like, we're going into power hour, let's go let's see
Exactly. Yeah, like
let's
get
see
ready.
something happen.
Exactly. Yeah. No, I agree. I don't, and that's what everybody says. Like the only times to trade are the first hour and the last hour of the day. So maybe I should start looking, but I've just always been someone where I would trade the first hour, hour and a half, and then I leave the house. Obviously, when COVID isn't happening and when summer is happening, I'm
Yeah.
going to be leaving the house at 11 o'clock, going to the pool, getting lunch, like doing things outside. So I don't want it to be like something where people are depending on every day 3 to 4. I'm like, oh, this is what's happening. And really, it's usually a one directional thing. Like you can
Right.
pretty much come to your computer at 3 o'clock, and is it going to move down or is it going to move up? Like it's one direction at that point. Like there's
That's
no
that,
one really fighting.
Yeah, that's right. And that even kind of just one of the strategies I was looking at this morning, because I was up earlier for the up earlier for the open, or pretty close to it, is do you think there's any merit in just basically setting a trade on either? So if we look at how the last hour pans out, or maybe the last 2 hours, or I should say the last hour before we go into the open, the market typically wants to break either way. Does it make sense to put a trade in on either side of the breakout and then just let it break out and then just capture some points, capture a couple points, capture a couple ticks there? Have you?
I've never done that. You could.
Okay.
You could, like, it's obviously feasible, but
Yeah, because I'm on because I'm on either side of the break, and I don't care. I mean, I have trades waiting on.
You take the loss. Yeah.
Yeah, if it breaks, if I set it again, extremely naive thinking, and maybe I'll chat and see how this flushes out over time. But if I set it a relative distance away, I can catch the break of momentum going one way. If I want to try and catch at least 2 or 3 full points, I don't care if it breaks long or breaks short. I'm just trying to catch the breakout.
Right. Yeah. No, I get that. Yeah. Yeah.
So yeah, just kind of having that, just kind of that thought or idea. But
I think it's smart, but sometimes with the breakouts, they can be false breakouts too.
Sure.
So they'll dip over, like say you have the strongest line, like you have your LIS or you have a daily support and all this stuff. So in my head, and this is what I kind of say in the room, I'm like, if we get under this 75 level, we should be good. But sometimes it will be a false breakout. So some people will wait until it gets under that 75 and they won't, they'll wait to get in at the safe time, which is smart. But some people like me today, I was like, sick of ES, so I got in up at like 80 or 78, and I was like, no, like this is going down, like I'm getting it up here. So and that's where I called it up at 80, but I knew we still had to get through 78 and 75, and then hadn't gotten through before, like it touched 75 and then it kept rejecting. So yeah, like once you get through those levels, you should be clear to go, but sometimes it will still do like a false breakout where it goes. So maybe you would just need to give a good amount of space. Like if your level was 75, I would say don't get into like 73. Like 74 might be too close, like, so at least like ES, so 1 point, like 1 point isn't enough, like, cause it can dip 1 point and then rip back up. So.
Right. Yeah. No, 100%. Yeah. Where the, maybe that's for something like, look at what the ATR is for how it's going or that kind of thing. But I agree. You don't want to get pulled back in. And I'm sure, the institutions have looked at those strategies and all that kind of stuff, cause you could easily get, shorted, you easily get pulled in the wrong way if it if it doesn't go fully breakout kind of thing. So yeah, I see what you're getting at.
Right. Okay. All right. So this is the VWAP, and I pulled up like the definition of it because I couldn't remember, and it's the ratio of volume or value traded to total volume traded over a particular time horizon, usually one.
Okay.
So so the volume traded over the volume, the ratio of the value. So what does that even mean? The value traded over the volume? Like, I don't even really know. I just know it works pretty well for like support or resistance. Like you see here, it was kind of supporting, and then once it broke through, and like here it kind of.
I see what you mean.
Through. So more of like a moving like support and resistance. That's how I see it.
Okay. Okay, that makes sense.
It's pretty valid, but let's see if I go to these 5 minutes, kind of the same thing. Yeah. Okay. So, all right. The next thing I want to talk about is it's not an indicator, but it's more of like a tool. So today I saw this, and I feel like you'll start to see this, and I think you've worked with this anyway on your own, but whenever you see, if it doesn't even matter what it's in, NQ, ES, gold, when you see a run up like this, just go ahead and get your Fibonacci retracer out, because this is not going to last. Like, it just can't. It's not feasible. Like, something happened off the news, something like it is way too like within like 1 hour, whatever. It happened way too fast, and then as you can see, it even started to find like a top up here, and we had all this LIS junk. So it's like at this point, and this is what I did this morning, and this is why I called it. So I think I got up around 8. I was looking at it I remember I drew it out. I pulled up my Fibonacci retracer, and I was
Yep.
like, let me see where this could get today. And so I did it right from the start of the run up, and I went all the way up to here.
Yep.
And then most people use, yeah, it's exactly where it was. See, so most people use 50%. Some people like the 38 or like the 61.8.
Right.
But and look how spot on this shit is. It's crazy sometimes how these work really well. But so what you would do, like before you saw any of the, I just want to move it over. So it's like, okay, like it's the morning, whatever. Like, oh, look at this huge move up. Let me draw my Fibonacci retracement
Yep.
because there's a lot of conjunction up here. I think it might obviously pull back down. Even if it pulls back down 38%, whatever, that would be a nice move. So when I drew it out today, and I was going to put this in the chat and I didn't, just because I didn't want people like chasing it and like me not, because I wasn't alerting it. But I was like, I was going to tell it to Madeline because she trades oil a lot. So, and she comes from trading oil. So I know she's used to it. So I was going to say, Madeline, I see CL getting to 25.20 today because when I did my Fibonacci, I think it went to 25.20. This is 25.08. And then I had this LIS here at like 25.15. So, and then I had this line at 21.21. Oh yeah. So I was like, oh, it's going to at least get to 25.20. And at this point it was up in this area. So it was like 26.30. Like that is a whole point. A point in oil is $1,000 per lot.
Oh, wow. Okay.
Like that's huge. So just to say, okay, get in it and hold it, like it's probably going to get down to here. Even if it got to 45, that's whatever, 60 ticks. Yeah. $600 per lot. Like that would be really good. So I was thinking that, and then later in the day, I wasn't around. It was like 11 o'clock or something. And she had messaged that it was like going down. Maybe it was around this time. And I looked at my phone and I was like, yeah, I saw it going to 25.20. And then all of a sudden it was at 25.20 and then it was at 25.10. But look, this made a 100% retracement, like more than 100.
Yeah.
Which is crazy. And like, you're not always going to get that much, but with oil, it is kind of wild like this. So you have you might as well, as soon as you see like a big move up or a big move down, you might as well retrace it. Did it pull back up at all? It's probably going to pull back up. So then if you use this tool, excuse me, I keep yawning. If you use this, then for the move down, take it from here to the move down. We might get back up to 24, whatever this is, 80 something, 24.85. So where it is now, I have to figure out what my LISs are for tonight, probably like right around this area or whatever. You could see it, if it finds a base here, it finds a base on the LIS, whatever, and moves up, we could easily tonight see it move back up towards that area, especially because oil and gold move more overnight than like the indices do, unless it's like COVID or whatever. But yeah, we could easily see it move, even the 38%, 24.41. That is a whole point from where it is right now. It closed at 23.39. We could get to 24.41.
Okay.
That's a whole nother point. So yeah, so I'll be on the lookout for that tonight. I'm going to make sure I remember. Sometimes it's just like there's so much going on, like especially from like 8 to 9, because oil and gold move a lot more right before the open. I don't know why, they just do. But the indices have been moving too. And I know most of the people in the room trade ES. So I always try to make sure that I call that out. But I was really seeing like oil today, gold was being like retarded. So that wasn't really worth it. But oil was really moving this morning, even like in this area, like these are 15-minute bars, but when I was calling them, it was hitting TP1 and TP2 like so fast. So with all this resistance here, yeah, it was like stuck in this area. So then I kept shorting at like 26.20, and then getting down, this next level was 26.05. So that's 15 ticks right there. That's $150 per lot, and that's TP1 and a half or whatever. So that was working out really well. So yeah, I would say, let me see if I can pull up like NQ and see if we could do a Fibonacci, but yeah, like even this move, let's see this move up. So 50%, look at that. So look at that. I didn't even look to the right. legit, John, I just took it from here,
Yeah.
pulled it all the way up to the end of like this trend, and then look at where 50% lands. Look at this.
Yeah. Like I said, that's where I'm seeing in the more complex structures, it
This is
completely.
2:30. This is 2:30. It hit that. So
Yeah.
it ran up until 1 o'clock. And then once it starts pulling back, do your Fibonacci, put this in, say, you know what, my first target, your first target could even be this 23% line. Second target, whatever, 38. Like if we get to 50, we get to 50. It got to 50, what, an hour later? This
Yeah.
was 13, yeah, an hour later. You just put that short in, like, okay, it's turning around. I'm going to put my short in and give it a nice little bit of room to move or whatever. So even say
Yep.
you get in here, like whatever, 91.10, say 91.10, and it went down to 90.78. That's 20, 30, 30 handle. So $600 per lot in that hour.
Oh, okay. Yeah.
Just on one. Like, and that's what, and sometimes I don't use this as much as I should. And I'm like, damn it, I should have used it. I guess sometimes when there's like a huge run up, you're like not really thinking about other things like that. But let me see if we can find another one. Like, look at this. Let's see what this did. So this, oh my God, John, look at the 50% line.
Yeah. Right on it.
This is crazy, right?
Yeah.
Like, and then you can actually see it was forming a W. So then it kind of moved back up here.
Yep.
But because this was pretty strong. Remember, this is one of my daily levels. But it hit the 38%, kind of moved back up. So I probably would have been out of the trade there. But, oh, this is also a 5-minute chart. But yeah, but if you're just in and you're willing, and this is something that I want to start practicing, but I don't. I just want to get in a trade and let it do its thing. Like,
Okay.
don't move my stop loss. Not necessarily don't move my stop loss. Maybe when it gets to like this level, okay, I move my stop loss to break even. But like,
Right.
is it going to hurt me if I have a break even trade? No. Like, obviously I want to make this money. Like, I want to lock these funds up. But the bigger picture is there's so much more that it could give me. Why am I like bowing out so soon,
Gotcha.
So like I move it down too far and then I get kicked out right here when this whips up and then it just moves all the way down to
Yeah.
the 78%. So that's Fibonacci retracement. And then there's a Fibonacci extension. Let me see. My mentor showed me how to use that, but I don't remember. Let me see.
Fibonacci extension should just have two extra levels on it.
Oh.
So it should have it should be the same Fibonacci, but it's gonna have like a 150 and something else.
Oh, why does it go like this? Oh no, that's what he taught me to do. That once it makes like a 2-level move or something,
Yeah.
then he uses it. So you marked it at the low here and then it made a pullback. So then is it going to keep going? So then if it keeps going, where is it going to go? So kind of like after the pullback. So it made this run up, then it pulls back, and then like where are your levels for it to keep running?
Oh, I see. Yeah, because for the most part it'll just keep consolidating unless like an LIS interacts with it.
Right. Yeah. So, and see how this moved up because the high was here at this 46. It got higher. But yeah, but I guess it was saying once you get the pullback, like, okay, we think we found a bottom or whatever, then you can mark that and then you can kind of trace off of that where you think it's going to continue to go to because of this big move that has since pulled back. But
I gotcha. Oh, okay. No, nice.
you get that? Yeah.
Yep.
Yeah, my friend, he had showed me that in oil because oil will just run up and then like pull back and then keep going. Let me see. I've been loving the higher time frames. Like I went down to like 5 minutes the other day and I was like, ew, why did I do that? Like, no. Let's see. So here and then here. So it moved down. So think about this. So it moved down. It's finding support here.
Yep.
It did a little pullback up, and then so you would mark it like that, and then you would take the trade from there to see the continuation of the move down. And I think he said in this case you usually get 100%, and
Okay.
obviously this one did, but I've definitely used the retracements a lot more than I've used an extension. But I
Okay.
should practice this a lot more too, just because it seems like it could be helpful, at least for oil. I wonder even if I did it is to here, 23%. Okay. All right, remove drawing. I don't know if do you ever draw like channels on like, so like this, and then they'll give you a second one so you can see if it's like staying in a range.
Yeah, that's what the pitchfork drawing tool. I think on the other screen there.
Do we have it?
I think right there, the bottom of the column to the left over one more.
Oh yeah, it looks like it's even called Andrew's pitchfork. So what do I do with it?
Yeah. So okay. So remove the two lines.
Okay.
Right there. Yeah. Oh, okay. It's going to ask you. It's going to make you do the 3 points. Okay. Go ahead and just remove all the remove drawing, and then remove those drawings.
Okay.
So so for the Andrews pitchfork, yeah, go ahead and click where it says the high of 26.74. Click there, and then where it touches, it's going to be a three click system.
Okay.
Where the first red candle touches the line at like 25. Yeah, right there.
This one.
Yep. And then let's go look at the shoulder. Then put the last point on the shoulder, just a little more to the right. Yeah, that's probably fine too, right there.
Oh.
Maybe, yeah. So basically, it's just going to run in that within
here.
Right. That's what it is, and really, that's all I'm doing on the trading view is the channels. When you basically have momentum in a direction, it'll basically run in the channel, and the one on trading view has a slightly more defined channel, and you can just literally see it running into the channel. But then once you start to, this one is kind of interesting because it breaks down beneath it, so this just ran super hot right, towards the 100% mark. And then actually, again, the way that I would construct the narrative is given the channel that's been drawn, it overperforms, then corrects back and keeps going, and then it just has to find a spot. It has to find a spot to level off. But during like the midday, and again, like on the 1 minutes, you'll see it form this kind of a channel here with Andrew's pitchfork, and then it'll go ahead and break out of it'll go ahead and break out, so to speak.
I wonder if I can find, so if it was like here, could I do it?
Yeah, you kind of could, so to speak. So just from a real simple example, you can go ahead and put the first point there.
Here?
Yeah, that's fine.
Okay.
Yep. And then put it put the next point deep down further where the let's see here, the engulfing candle is, just a little to the right, a little up. Yeah, just gonna put it right. Nope.
Under the candle?
Under the one right next to it. Put it on the bottom of the one. There you go. Awesome. Yep. And then let's go and put the third point on the shoulder of the body for the other engulfing, or maybe to the top.
This one?
Yeah. Yeah, I guess so. That's actually not a bad example, but you can see. Okay, yeah, set the other point right there. It's a real short example. I think ES has better examples, but you can see it trends down. Then it starts to kind of level off a little bit, and then we can kind of see. Yeah, we see it hits the trend, but there you can see the breakout. Notice how, and again, how it rides the outside line and then finds the other thing. So that's where I see the patterns, like during the day, like the 11 to 4. There are so many of those patterns that show themselves and behave. But the hard part is the hard part, and it also respects the EMAs. It really follows it, but you just kind of have to there's probably more that I think, like, again, for myself, I would have to understand, because and that's where I just come back to kind of just taking this as an example of why I ultimately, let's see, I'm just aligning my thoughts in my head here, how my experience aligned with your advice from the standpoint that that 11 to 4 time frame is deeply technical, where I'm sure thousands of other professionals are doing this kind of work, just, but a case in point, when you draw these structures out, it matches, but yet they're 2 or 3 moves ahead of you, so to speak. So it's hard
Right.
to see.
And how do you determine when to start drawing this? So you see the initial move down, and then you see the pull up. Is that when you're like, oh, okay, let me draw the pitchfork?
Yeah, when you start to see the shoulders,
like the retrace or whatever.
Yeah, when you start to see the retrace, and then you can just kind of move it. You can just kind of move it as you go, so to speak. So, but like
and you want it to stay on this side, or you want it to stay within one of these two?
You want it to stay. You really want it to stay inside of the channel.
Right.
This might not be the most, but as long as, so if you have a short position in this structure, or you take a short position when the structure presents itself, you basically just stay in it until it breaks out of the channel, and then you're done. Because when you break out of the channel, then basically you're kind of in a gray zone, so to speak.
Okay.
And then as well too, there's another line that we could have added, another line that's called a shift line. And as soon as like and again, from what I'm looking at, like on the 1 minute, as soon as that shift line is broken, whatchamacallit, then we're gonna go. Then it goes to from a bull perspective there.
Mm-hmm.
Yeah, this one might be a little more. This one might be a little more.
1 minute of ES.
Yeah, this one might be a little more difficult, so to speak. Oh wait, go to the right a little bit, actually. Let's see here. Keep going. Yeah, short. This one could be one. You kind of see how there's a little bit of it where your cursor is. There's a little bit of a W. You're basically drawing from one corner of the W over to the other side of the W. Yeah, probably right there. And then yep. Yeah, and see, actually, you're just drawing that out. See how it falls right within that range, and then if you scroll to the right, what's the action after the breakout?
Let me take this off so I can move over.
Okay, yeah. See how we have, okay, breakout, and it kind of keeps going in that direction. But case in point, that's kind of what the other structure is. And
so at this point, so then you would go. So once you drew this, then what? Then you're short, like and at any point in this area.
Yeah, basically you just stay in if you are in a short into this structure, you can go ahead and just basically stay in your short until you have that first candle body, which breaks out.
This one?
Yeah, and that's going to be kind of your exit point. And depending on how long you run inside of that channel, you can take trades at the top or the bottom of the channel, because you can literally see this actually turned out to be a pretty reasonable example, because relative to the channel, it's literally banging off the endpoints, and then there's a midpoint, and it kind of dips below a little bit. So the actual price structure that we see respects the channel. It's just that there's high volatility on this, and and that's probably something else I learned as well too, doing this on live a little bit, that the risk profile that you take doing this has to be super small, like 1/3%, less than 1% of less than what 1% of your balance is, because these are super small moves. But this is from a student's perspective. This is also where whatchamacallit, I know that you're looking at the 5, and I'm looking more so at the 1 and the 5, and some of the other time frames. This is where I go in and I'm looking at and certainly not negative feedback by any stretch of the imagination, but I do go in and look at the alerts after I get up, or I go and take a look, and I look at them post fact at the 1 minute, and I'm like, I can see on the 5 why this would be, but when I jump down to the 1 and I draw out this structure real quick, it's just like, it doesn't seem to be as clear value as some of the other ones, so to speak. So there's some structures, some substructures down in the 1 minute that I see that are like this, where I'm looking at some of the alerts, and it's not that it's bad or negative, like I said, but I just that's the kind of thing that I'm seeing, where it's like, an alert came out, but the alert came out right as like where the breakout would occur. Granted, in this one it keeps going down, but
I see what you're saying.
Yeah, it keeps the trend keeps going down overall, but case in point, and then it finds another.
But this would be a good, even if you didn't get into like here or whatever. 85, and then you get out at
Yeah, so you know where your
75
entries.
or
Yep. So you know where your entries or your exits are. So like, not to say like when the price action goes parabolic and it goes straight up, but you could draw the pitchfork and say, oh, okay, I'm at the bottom of the pitchfork drawing in. Okay, let me say it this way. We are, I guess the thought process that I have in a lot of spots relative to this diagram real quick, just to put a point on it, it would be, it's like, where are we at within market structure? Are we at an LIS? Are we in a way? Are we approaching? Do we have room to move relative to the horizontal structures? So this is going to be a dynamic structure. So within the dynamic structure, where are we relative to the EMAs, and then where are we relative to the channels? Because that's really all the pitchfork is doing. It's just defining a channel. But you can see, oh, okay, when I come down to the bottom of the channel, like the 0% to 100%, I'm moving back into a dynamic. From my dynamic levels, I'm moving back into a position of value, so to speak, where I can go, or a position of value where I can have entry if I choose to take it. It's just that these structures, these are the inner structures that dominate the H and the M and the cup and the W's and those kind of, that ultimately form out those larger structures. But that's where I really came to understand from a risk profiling perspective that if I'm going to be taking a position solely based on this on dynamic market structures, then the risk profile has to be super small, like a third of a percent, a half of a percent. If I feel that I can capture value that way, whereas the things that you've shared over time is I can increase the risk profile to like 1%, 2% when I'm trading from a key level in those opening time frames. And as much as we're talking about indicators and these kinds of things, it just really seems to me like those opening hours and then power hour from 3 to 4 on ES or maybe some of the others, where it's just like your time is best spent focusing on those time frames and taking best advantage of the volume and how the market moves during those time frames. But this is some of the inner TA stuff that I've just kind of been exploring, and like the picture shows here, or the channel graph shows. That's just where I'm seeing it go. So yeah, that's what I thought was interesting, and kind of like the Bollinger Bands are probably, I think, the more dynamic version of that. I kind of felt that was overwhelming as well too when I just took a quick look at that. I actually thought that this pitchfork structure on the 1 minute is a nice verify.
But I guess I want to make sure that I'm putting it on in the right area. Like
the little bit of, this is how I understand it, and then the little bit of, I'll send over the piece of documentation that kind of showed me kind of what it was about. It's kind of, I don't want to say arbitrary, so to speak, but it's kind of like not really defined, like where the shoulders of the pitchfork go. But that's kind of the premise, is you just need to go ahead and have, like, so for like there, that could be the base, and then you could use that.
That's what I was trying
you could use the retracement. That's all you're really doing. I guess probably the better way of saying it, you're probably just drawing a channel structure on the basis of the retracement. So as soon as you feel you have a retracement.
No.
It's probably better. Let me see here. Actually, no. The first one probably needs to go to the top of that. Yeah. Well, go ahead and remove that. Go ahead and remove that structure.
Put it here.
I would put the first one.
If we're thinking we're moving up, I guess I just have to think about it logically. We think we're going to start moving up.
Well, go ahead. So on the far left side, under just above 1015, that's clearly the first one. And then you have a run up. I would put the other one at the top. I'd put the other at the top, actually, all the way to right there.
Oh, and then bring it down.
Bring it down to price low. There you go. Oh, no, we'll go to the other one.
But what if we saw this and then we thought it was moving up here? I guess that's what I'm saying.
Sure, and then the trading view chart. But then it didn't. So the trading view chart will let you move this. Yeah, go ahead and land this here. I think this is from an extremely naive perspective, I think this is somewhat reasonable from the standpoint to identify the channels. So I guess what I take from that is that it's kind of, it's in the lower half of the channel, so it's kind of weakly moving along, but we haven't broken out of that structure. And then the horizontal structures can also dictate. Actually, scroll to the right and see what it does when it hits. Yeah, see now how it hit LIS. It did the double tap, and then it see how it breaks the channel. And I'd be curious to see yeah.
So you would have gotten out. You would have gotten out around here, which is 2890. But look at this entry. Even if you got here, 72. So yeah. So still 18 points. That's big in ES. I guess. See, but what if I would have drawn it here, and then I'm like, okay, let me get in. Like, let me alert it and let me get in. We would have gotten in here, say at 73, and then it drops back down to 70. Yeah. Oh, it's only 3 points though.
Yeah, I think it has. I think it has to be within your Yeah, it has to be within
like your risk profile or whatever.
It has to be within your risk profile. It has to be within your risk profile there. So that has to be, the 3 points has to be well within a whatever the ATR is, especially if you're used trading at 5. But that's just one of the other structures that I've been working with.
This
and
is at 11 o'clock. See, then you could have put it on and just kind of left, like been like, okay.
YOLO for the day out. But
because it's not going to do anything that good. Like it's like it might slowly move. Like let's see. Like keep my stop in and then see what happens.
Yeah, but that's where I think that and again, this is where I think that. Since I sit at the computer all day and do other technical work, and I have the opportunity to mash the buy and sell button all day long, but as I watch the structures, I'm like, oh yeah, like there clearly are others doing these things, so to speak. But that being said, they're just more experienced, better, probably better data, other data sources, all that kind of stuff. So it's not my at a future point, maybe I'll build up my not maybe, but will build up the portfolio profile to go ahead and do this in a meaningful sense. But really after 11 o'clock, because this is what I see going on at 11, is that there's a very high level of TA work that's occurring.
And you think the Pitchfork works well in that?
I think I think the Pitchfork works well in terms of the channel graph, but I think I literally think it's probably only from my experience, like I tried to do it up at the 5 or do it other. I think it's an extremely granular tool set that's being used by people that are also managing trades at a very granular, in a very granular fashion. Like they're trying to, take it right off the bottom channel for breaking out the other way, right. so on and so forth. That there's a lot going on. There's a lot going on, so to speak.
And then, like, if it broke out above this, like how you're saying, for a while it was in the bottom part of the channel. If it broke out above here, then at that point, well, obviously I would be moving my stops up anyway. But you could say something like, "I'm not going to move my stop until it breaks the channel," kind of thing. And then if it breaks up here, then move your stop up somehow.
Yeah, and you can feel pretty. I mean, and likewise as well too. Just from again a very naive perspective, as long as it's running in that channel, even when there is a tick down, whatever, you can feel pretty confident. Like, yeah, I'm just going to stay. I'm going to be in my taken position until we break out of this channel. So
right, and you could move your stop loss up, like knowing that this is the channel. Like, okay, I'll keep it here now at this 78. So if this would have broken through, you're still securing the 72 to 78.
Yeah, and from an extremely naive perspective, that engulfing candle and then where we go parabolic right there, it really wouldn't surprise me that so many others have this structure drawn and they're like, I'm just going to wait until it hits this point here, where we know. And then get in. This is my entry, and then we're going to go up, and then we found you already have an LIS that's drawn there. We're going to go up until we hit. We're just going to go up until we hit this LIS, and then
yesterday's high, whatever. But it blew through yesterday's high, so it was like that's good.
Yeah. That there's enough pent up buyers to go ahead and push it through. So and so basically, I guess I just kind of landed on a little bit from indicators. I'll definitely take a look at take a look at the MACD as well too, because that looks interesting in terms of what was shared there. But mainly just using the Pitchfork as a. I'm going
to start using it. I've never seen this before.
Yeah, and this is what I go. This is what I go through, and like I said, and I'm really just taking the trades. And I'll send the detailed video real quick. just so you can see what I saw, in case I'm not explaining it in the best
Sure.
way. But this is what I'm seeing, that you know, like a couple of alerts have come out, and I'm like, oh, we're outside the channel on the one, we're outside on the channel on the 1 minute, because that's kind of how I view it, or how I've kind of come to settle on the multiple time frames. You know, the 15 is just basically the overall strategy of just kind of how things are going. Then the 5 minute is more of the tactical chart that occurs. So what is currently happening, and then the 1 minute is probably where I would feel 1 minute is probably where I feel most comfortable doing the actual execution. So like when buy and sell are placed, I'll probably be sitting on the 1 minute, unless I'm just feel super comfortable with a stop loss or a trailing stop, and then just let it trend, and I get what I get kind of thing. But from the concept of multiple time frames, I'm not glued into just that. I'm looking at the 3 time frames down to the ultimate, the execution one, just because I'm taking smaller. I thought about this too, because I know a lot of the information that you're presenting comes from the 5. I think as my account profile builds up over time, that I'll graduate to the 5 being my execution, just because like, oh, I the 5 obviously encompasses all the data that's in the 1 for very obvious reasons. So therefore, once my risk profile trends up to the 5, then I can just principally execute off of the 5 minute, because my, again, profile and objectives and goals and all that kind of stuff will handle that. But that's kind of how I've been viewing or treating the levels with the indicators, and just kind of an overall strategy.
Yeah. Yeah, no, that's cool. I'm glad you showed this to me though, because I'm going to look at it. And that's the thing that I was kind of saying before about the indicators. Some of them I don't like, because, indicators are of past data. So it's like, this has happened already. Okay, here's your information. So that's why I feel like some of the indicators aren't that strong, because it's like, you're like, and that's why I like the Fibonacci's and stuff, because that's not giving you past data. You're literally tracking something that has happened, but then you're seeing kind of where it could go in the future. But then when it comes to something like this Pitchfork or the Fibonacci's, it's more about where it's going, not about what's already happened,
Yeah, no, I think that I think for indicators, I've probably settled on something along the lines of the EMAs, the EMAs for the 50, the 100, and the 150 off of the 1 minute. What you mentioned about the 9 and the 35 definitely makes sense on the 5, because those are actually pretty close. I mean, 45 and then a 175. So those are kind of like in between. Well, one of them, and then slightly in between, actually towards the higher end of the others. But they're consummate in a certain sense, where you're going to be shown a higher or low for what a moving average is.
Right.
And then I do look at the I do look at the Fibonacci's from time to time, just to see. But the Pitchfork, I've kind of just gravitated to a little bit, and then as well to oscillators. But going back to the Pitchfork, from the standpoint that really the concept of the channels from the Pitchfork encompasses multiple retracements that occur, because that's really all that's going on. Is we're just retracing to a certain point.
But it's not retracing enough that you should be worried, because you're not breaking the channel.
Right, and you're just continuing in the same direction, so to speak.
Yeah,
so.
I would just be nervous that I don't have this drawn correctly, but I'm going to watch your video or whatever. Like, I would obviously have this first point. Okay, that's clear. We're clearly making a directional change. So, okay, and then you have to wait for the pullback. But like I said, I would have thought maybe this was the pullback because it started going sideways, but then it actually pulled down a little more, but it was only a 3-point difference. But
yeah, it's
redraw it, right? So then you would just redraw it. Like, if you're still in the trade, you're like, okay, I'm okay. I was giving myself 4 points or 5 points or whatever. Then at this point, you would like just redraw it to this point. Yeah.
And I think that's just really a function of the market makers that are in the trades. They could come in as sellers just to create them. So again, naive hypothesis to create, right where the drawing tool is held, create, a amount of sell activity to create a better price, so on, catch the
they're so sneaky, and that's exactly what they did this morning. I was like, this thing is going to fucking dropped. And they just kept teetering it. They're like, oh, let me bring it down a little. Oh, no, we're going back up. Like, no. And then at the open, they even ran it up like higher. And then, of
Yeah.
course, it like dropped exactly where I wanted it. I was like, get out of here.
Yeah, and that's the other heuristics that I've just kind of observed. Like again, based off the 1 minute, is because I have those 3 EMAs set up. When the price action goes between the EMAs, I just don't get involved. That's like the no-go zone. The price action has to be outside of the 50. Has to be on kind of going with the 50, so to speak, on the outside, because those structures are kind of whoever is making the market at that point. It's too complex for I think, for at least for the tools that I have, or then I'll just kind of what I'm trying to do at that level is just too complex. And that's where I think that the opening hours, and then on E to S, the 3 to 4 is a little more true in the certain sense, like, okay, let's get money moving kind of thing. And then you have the opportunity to get in there and actually do something with your trades. But otherwise, the risk profile during that time of day, definitely changes quite a bit. And relative to taking my account live the first time, that's probably something that I didn't realize. Again, I completely heard you telling me that, but just took experience, like, oh, okay, the profile changes during that time frame.
Oh my God,
well,
it's so serious. Yeah.
Yeah, for all those reasons. So that's where I kind of went back and just kind of scaled back and went back through and worked at it. And I'm just like, I still don't have, as much as I'm trying, relative to this little aspect of some TA work, I'm like, Lauren's advice is still the best. And when you tell me that somebody that's made significant or very good income or wealth based upon just those opening hours, I'm like,
seriously, like not even the afternoon. He literally just would do 9:30 to 11 every day.
and that's it, just
That's
hard
it.
stop.
That's it.
Wow. Yeah. Okay. Then there's no need to make it more complex. Just do your trades during that time and go enjoy the day. There's no need to be as much as I find it cool and interesting. There's no need to be a slave to the keyboard, so to speak. So
right, exactly. Yeah, especially in the summer. Like in the winter, okay. Like no, but see, even in the winter, we're like, okay, go play poker or something. Like go do something
right.
else. But yeah, potential affiliate. What the fuck? So I have that thing on my website where it's like a contact page. So I've been getting a good amount of emails, which is great. One of them, he titled potential affiliate. My name is Daniel and I'm with Flow Trade. I'm reaching out to see if your group would consider participation in an affiliate program that is mutually beneficial for both companies. What does that even mean?
It means you're going to do referrals for deposits into their system, and then they'll give you
like
rate.
if they have different things that they're doing, like if they're doing like Forex or crypto or something. Like
yeah,
something
I'm
other
sure.
than what I'm offering, because obviously I'm not going to be promoting people to leave me.
No. I mean, like Tradeovate, so to speak. Like Tradeovate would give you like 5.
Oh yeah, well I reached out to them and they were like, oh, I don't know. I was like, I'm having, and at this point it was like 50 people. Now it's like freaking 100 people that have signed up for Tradeovate just because of me.
Yeah, no, completely, entirely. And then they give you rake back. Use a poker term, give you rake back on the fees.
Yeah, no, that's what I wanted. Like, I didn't even need what cash would. I would just be like, oh, can you lower my fees, or give me that plan where it's like, no trade fees for a month or something. Like, I don't know.
Yeah.
But he said no. He was like, oh, I don't know if we can do that. I forget what he said.
Oh, it's unfortunate. That's unfortunate, but that's probably what they're looking for.
Yeah. All right. Well, how do you feel? Do you have any questions about indicators or the stuff, or?
No, I feel good, and then the opportunity to kind of talk through real quick, just kind of the overall strategy of how be approaching things here next week, and just carry on and move forward.
Yeah, exactly. Yeah. So we'll, obviously, we talk all the time, but yeah, when it comes to really not even next week, you can watch it whenever you have free time, whenever you feel comfortable. Okay. So even if you want to do it like on a Sunday night or something, and then just email me, obviously, any questions or concerns after the fact, and then I will just respond that way.
Okay.
Obviously, we can always get on a quick call if you need to too, if you want to see like an example or something. But it's really pretty clear and straightforward. He does a pretty good job of explaining it.
Oh, sounds good.
All right. Cool.
Sweet.
Cool. I'm excited to see you progress even more, and we'll see what happens. But
we're gonna stay after it.
Picking all this up really well. So
awesome. Are other students doing pretty good too?
Yeah, so well, obviously they're a lot further behind you. Like I had one guy start last week, and then I have somebody starting on Monday, and then some people are just like watching the videos. So I started a separate program because this one-on-one thing, like really, obviously it takes up a good amount of time. And if I have multiple students, like there was somebody else that wanted to like go live today and do the one-on-one. I'm like, listen, like I can't really take any more on right now because
Yeah,
with the business, and I still have my job and my child. It's like, it is hard. So,
it's a lot of
um,
stuff.
so I started thinking, I'm like, well, I have like, so from one of my first students, Peter, I asked him and he didn't care. I'm like, he's fine with me using his recorded videos to like, use as promotional marketing, whatever, and
Yeah,
then using those as just video coaching. And then I'm available for any type of questions or, follow up afterwards. So I don't have to be available for 6 full hours in person
right.
kind of thing.
Oh, okay. No,
So,
that totally
so
makes
it makes it
sense.
easier on me, and then it's cheaper on the consumer. So
Okay. No, that's awesome.
yeah. So yeah, it's cool. I'm figuring all this out. Yesterday was my 1 month in the room since you joined. You
Yeah, I
joined
was
on
gonna.
4/7 and today's 5/7.
Oh, that's awesome. Yeah, I was gonna say it shows like the number of people there, 134. That's a good group.
Crazy, right? I'm trying
That's
to get to
awesome.
150 by the end of the week. That's my next goal. I just keep having small goals. Like at first it was I just wanted 50 or like 30. Then it was 50. Then it was, oh my God, do you think I could ever get to 100? Then I got to 100, and then I was like, what about 120 or 130? And now I'm like
Yeah.
150.
Yeah. No. Totally. Are you gonna do the Zoom meeting tonight?
Yeah, I'm gonna do it. I think it's 6:30. So I'm gonna go.
Okay.
I need to do my LISs, and then I need to grab some dinner. So
Okay.
I'm gonna do that, and then I'll jump on the Zoom. I'm just gonna do pretty much an open forum again of people asking questions and maybe showing more of Tradevate of newer people since we have two
Yeah.
new people. So
Well,
it
that's
helps out,
awesome.
I think. All right. And we'll see if we can. I'm gonna try not to call any trades until like 7 o'clock because it really, I don't think it's very good until 7 or 8 o'clock, and it gets so
Okay.
much better at like 8, 9 o'clock. So
Yep.
no
Yep.
reason to
When it
be
opens.
eager, Lauren.
Yep. All right.
All
Sounds good
right.
then.
Well, this is good. And you've gotten all the videos that I've been sending you, right? Like that
I
I've been
have.
adding you to.
Yep.
Okay, good. Just wanted to make sure. All right. So once this is downloaded, I'll make sure I link you to it and so you have
All
it.
right.
All right, John. Thanks.
Sounds good. I'll talk to you soon then.
Talk